Joining me today is Mr. Brian Paes-Braga, a Canadian-born entrepreneur, merchant banking executive, and author. Currently, he serves as the managing partner of SAF Group, a leading structured credit and merchant banking group which builds, invests, finances, and advises high-growth companies, as well as provides flexible and long-term capital solutions to public and private corporations while providing stable returns for investors through its structured credit arm. Brian was founder of and CEO of Lithium X Energy Corp, a lithium resource company, which he then sold for $265 million to the Chinese. He was also chair of the board of directors for Thunderbird Entertainment, and recently went public with DeepGreen Metals, and now called the Metals Company, which listed on the NASDAQ over $2 billion, and in September of 21, and aims to supply the world with ethical, clean metals harvested from the deep ocean floor. I had a great conversation with Brian. I certainly enjoyed it, and I hope you will too. And we're live. Brian Paes-Braga. Did I say it right?
Yeah. Yes. And no.
I've known you for years, but I probably always said it wrong.
No, I think I've almost convinced myself that that's the right way to say it. My dad would say it being the Portuguese.
Yeah.
Man that he was Paes-Braga. But through time, it sounds like, the North American pronunciation of it is Paes-Braga.
I prefer the Paes-Braga.
Thanks, man. Yeah.
Paes is
authentic.
easier.
My dad.
Yeah, no, for sure. And you've got a book out.
Yeah.
And when did you put that out?
That was August 21. Yeah, August 2021.
Congratulations, man.
Oh, thank you.
Big accomplishment.
Yeah, it was a journey, It was
I read it.
Oh, what did you
yesterday.
Think? Oh, really?
Yeah, because you were coming in, and I was like, I gotta read this book, and I have to say it's great.
Thank you.
It's a really interesting. Wow, like you really put yourself out there and exposed a lot of things that I think a lot of people would have been shy to do publicly. Like it's very it came from a vulnerable place. No,
definitely. I was going through a time in my life when I wrote that. It was almost like it was a journey of boy to man. And it was just like looking back at at childhood, at being a young man in my 20s, and for me, and I think a lot of people in this day and age experience fathers that are super busy, and I think it was me just kind of making sense of that, and yeah, just moving forward into manhood in a way that I took time to think about a value system and priorities, and I pushed pretty hard in my 20s professionally. So I was just trying to express to the reader that we all have our challenges, and when someone seems super successful, it doesn't mean that they're they figured it out, and we're all on this journey of life. And I hope the reader just maybe reflects on their own life and understands maybe some of the decisions they make. Is it authentic? Is it coming from a place of ego? How that plays into decision making. And
that's like the ego bit is a fantastic sort of intrinsic look at what happens to a person, especially when you get success. And we all know where success comes from. And, we like to think it's hard work and dedication, and it is all those things. And then there's a healthy amount of luck, and, I guess it's easy to get caught up in it. And then you look back on it and you go, well, shit, that luck was a pretty big component of it, but it's not everything, but it's definitely there. And it's hard to not get caught up in your own success. And I thought that was really compelling with your book, is that you explored that. You went deep into that rabbit hole. And that for anybody out there who wants to kind of experience it vicariously through Brian's adventure and his kind of a story. I think it's definitely worth a read. And there's tons to take out of that. You got some really cool people that have come in to, not only mentor you, provide you guidance and in different stages of your life. I thought one of the most interesting things was the bit with like your father. So I was listening to the book, and at first I was thinking, because he was a hotelier, and you had this experience where, you're explaining that, you weren't born with a silver spoon in your mouth, but at the same time, there was these callbacks to your father's, sort of lineage and a great grandfather that was like a president in Portugal.
Correct.
And then your father had a taste for the finer things in life.
Correct.
And then there's this story about Nando. So maybe you want to share that. I thought it was hilarious.
Well, I will. Thank you. I think the first thing I'd say is our parents shape us so much, right?
Yeah.
And I think as I took some time and came out of a lot of busyness, just looking back at how much my dad in a Four Seasons hotel shaped me, and like it's great in so many ways, but then sometimes one can misappropriate priorities. And,
sure.
So I just feel compelled to share that. And I think that as maybe speaking more to men, because that's been my experience, just how much of a shadow our fathers can have on us. Because, I think for so many of us, it's our first level of influence. They're our heroes. And then just kind of, for me, going through the experience of, okay, you know what? He did his best. He's had so many beautiful qualities, but then it's like, okay, what kind of man do I want to be? And what are the great things I'm going to take? But also what are some of the things that maybe I learned early days that I want to just, evolve? And then just the Nando story. So Nando's, which is so successful today. I think it was the first one or one of the first ones.
I love Nando's.
Yeah, it's so good.
Like, it's pretty good. Yeah.
Pretty good. But it's actually a South African entrepreneur.
100%.
Yeah, I didn't know that.
Because when I was in Ghana for years, and there was a Nando's at the mall in Ghana, and it was one of these places I would, I'd go to Accra every now and then for a little visit to the big city for a weekend.
And get your Nando's.
Oh, fucking Nando's was on the list. Yeah.
Yeah, but it is based on peri peri chicken, which has some of its I don't know the history of peri peri chicken, but there's some level of Portuguese influence.
Sure.
And my dad in his incredible European, etiquette, dresses in his like 3-piece suit to go to the Nando's and is met with,
And you guys all got all dapper too,
all of
right?
us.
You got
all of us. It was like
up.
this big thing.
Yeah.
And
like everybody put on your best.
Yeah.
We're going to Nando's.
Yeah. And that was my dad was always dressed to the nines, perfectly shaven. He was like the epitome of that generation's hotelier.
So cool. Yeah.
Yeah. Anyways.
Wow. And you got there and realized, holy shit, this is fast food. Yes.
But, there's these memories that I'm sure you have too, Danny, in your life that shape you,
sure.
And you're just like, oh, that was interesting.
Well, the funnest part about reading that bit is that, and like, I think what your book does is it gives you an insight about the person. You get to share that chuckle.
Yeah.
You look back on your own and you go, I've got those too.
I'm so happy that
like
was your experience reading it.
Oh, absolutely. It was great. Lots going on there. The Lithium X story was absolutely, that was a cool one to read. But one part I missed was the start. So this is an interesting thing. I was listening to the book and I was thinking a lot about, what happened in my life and a lot of the interesting cats and characters that mentored me and took me through my story arc. I worked with Sheldon quite a bit at Pine Tree, and he played a big role in mentorship with me. Eric Sprott, of course, and others. And I look at that and I go, why me? What what was it about me? Like I was working hard. That was clear. I was a hard worker like you.
Yeah.
And, I wanted to do the very best. I wanted to put in effort. And, in some ways I look at your book and I go, this is Brian trying to help people.
Definitely.
You're trying to give something to younger people to cling on to say, hey, listen, this is maybe a bit of a blueprint into how you can, get it. This is my blueprint in some ways.
Completely.
And so I think about my blueprint and I go, well, wait a minute, there's an inception piece missing. And it was what was so special about me that allowed these people to take a chance on me and actually mentor me or take me under their wing or take a chance and invest in my thing early. And, you mentioned Frank Schustra, you mentioned, Paul Matisek and some other, highly respected and phenomenal people with a great, track record in the space and, these larger than life types. And, at some point you can do the hard work, you can do all of those things, but part of my key blueprint, and I think part of a lot of people's key blueprint that have been successful is that at some point, someone took a chance on them and they didn't really have a lot to show. Like at that point, like, you think about yourself today, somebody walks up to you at a show, and says, hey, I'm a geologist and I've got an idea. And, you're giving them the time of day. You might even give them a copy of the book, let's say, and say, hey, read this book, man, this can help you. But the reality is like, those guys actually took a chance on us. They invested fucking hard money into us.
Yeah.
And so let's explore that a bit. What was that like for you? What was that like kind of inception point?
There's been a few,
Well, let's start with Frank.
Yeah. I think, and I'll get into that. I just want to, something comes to mind is the book is there it helped me sort out my own story as well, but it is there to be a tool for young people in any career. Not to say this is the only way to do it, far from it. This was my experience.
It's my way.
Yeah.
It's the way it happened for me.
This way it happened for me, and coming from pretty fresh, it wasn't, I didn't write the book when I was much later in life. It was like, hey, this is fresh. This is very raw. This is during COVID. And I hope you take some, some points, and I hope it works in your life. For me, Frank was, he gave me credibility and took a chance on me when I had very little myself. And not to say, I don't think I lacked credibility, but I was a young man without a track record. I was 26, I think, at the time. And he didn't have to do that.
But, where did you run into him? Were you serving up Subway sandwiches? Did he come in for a Subway sandwich on a Tuesday and he was like,
no,
there's Brian?
No, I think your question is important. I think for people that are listening that are wanting to maybe get some backing.
Yeah, they need to do that too. I think that's an important piece of the blueprint.
Big time, big time. Especially in a space that if one is interested in building a natural resource company, mining or energy, it's not like in our business historically. I know you guys do a lot in tech.
Yep.
But it's not like there's someone coming up with a new technology that's building a user base of millions, tens of millions, hundreds of millions of people, Mark Zuckerberg,
sure.
So our space is actually very relationship driven. A lot of credibility when assets are purchased at low times in a cycle. A lot of those counterparties, those sellers want to know that there's someone that has been there, done that, knows what they're doing, maybe in a foreign jurisdiction, and knows what that life cycle is like. Mm-hmm. So I think specifically in our space, credibility comes with time, and that's probably true to a lot of industries, but not so much tech and more like real estate and mining, these capital intensive industries that long life cycle assets. And for me, between Paul Matisek, both offered something very different for me. And it was it was a deliberate decision at the time when I was starting Lithium X, which was, Frank is a great financier, understands like macro trends. But Paul Matizik is someone that has built and sold companies.
He's an executor. Yeah,
He gets a little more granular.
Mm-hmm.
And any of these situations that I've experienced, it takes a team.
So you suck. Do you say suck them out? No, you fucking suck them out. You seek these guys out actively. Was it like?
Yeah,
oh shit!
It was. Yes.
I want to do a lithium thing, and I need to hitch my wagons to Paul Matisik, the builder seller, the repeat. I know Paul, and I'm fascinated by Paul. Like first of all, Paul's a great guy.
Great guy.
And he goes he's explaining sort of his he makes it seem easy.
He does make it seem
right.
easy.
He makes it really seem easy. He goes, he's got a checklist, and he goes through the checklist, and he's like, okay, everything, we got to go through this checklist, and if we get through the checklist, the project is going to sell. And it's like, that's it, guys. Let's have a beer. Like it's the checklist time.
Yeah.
And so, and then
him.
Bassam is fantastic. So you had
Bassam's
Bassam in your
amazing.
corner. I love Bassam.
Bassam came a little later.
Yeah.
And again, another piece of like, if the listeners like, sports, it's just, you got to put a team together, sports team together.
Totally.
You need goal scorers, you
Absolutely.
need defensemen, you need a goalie, you need a coach.
Yep.
Like in any venture, to give yourself to at least, I think, stack the probability in yours and the shareholders' favor. I don't know many one man or one woman shows. Like it's a matter of getting a lot of talent aligned with conviction, and these things take a lot of talent, a lot of diverse talent.
So did you go to them with project in hand, concept in hand? Like
Yeah.
you kind of had this and said, I want you guys to,
yes,
like here's the pitch.
Completely. Yeah. I had bumped into a friend's dad who was a prospector, a great guy named Clive Ashworth. And Clive, I went to school, played hockey with his son, and went to school with his son and his daughter. So I knew him around the community. He had at the time done a deal with a company called Pure Energy.
Yep.
And taking everyone back to kind of 2015, it was a pretty tough market. Like I think arguably the toughest in the last maybe even 20 years. Like
bottom of the shits of the fucking shits. That was it.
Yeah, it was tough.
Mm-hmm.
But Pure Energy kind of had this, it was acting abnormally, relative to the rest. And so bumped into Clive at a restaurant in Vancouver, and he said, I've got some more ground down in Clayton Valley.
Mm-hmm.
And I said, great, we'd love to, learn more. And then we kind of got into it.
So who's we?
Me and a gentleman named Lucas, who we put the first kind of concept together.
Answer Lucas.
Yeah, Lucas is an amazing guy, and kind of did the diligence around.
Now, what's Lucas's background?
Lucas, when him and I started working together, he had just graduated from UBC.
Okay.
He had then worked on the drill rigs, which I really respected at the bottom of a cycle. He always wanted to get into.
You guys boys since like kids? Are you guys buds?
He's a few years younger. We kind of knew, we had mutual friends.
Okay.
But I wouldn't say we're like close buds.
Sure.
But I hired him because I really respected his work ethic. He's a guy that loved buying stocks, a lot of junior mining stocks.
You had dough in your jeans at this point.
Not really.
Okay.
No, I mean, I refinanced an apartment at the time to put the first $100,000 in to what became Lithium X.
Okay, so it was like, Lucas, we're gonna do this. You're gonna get a little bit of a.
No, he put a little bit of money in too.
Oh, he did.
Yeah, he put a little bit of money in,
yeah.
and
Wow.
but I mean, for me, like, I refinance like this. Maybe some of the typical story of the entrepreneur: refinanced real estate. Fortunate enough to grow up in Vancouver, where the prices were kind of continually going up.
Yep.
But drew on some equity in my apartment.
Mm-hmm.
Put the money in. Was able to do a deal with Clive Ashworth, the prospector. I flew down to Vegas. Drove about 3.5 hours to Clayton Valley one early morning at like 5 a.m. to meet him for sunset at a little dived, breakfast diner, and we drive over. I'll never forget it. I was in my rental car. Clive was ahead of me. We drive in over the valley, and for those, Clayton Valley's became a very hot spot. You kind of drive in, and Albemarle at the time, again, this is 8 years ago, right?
Mm-hmm.
And it just was like, it was this weird sensation, which was like, this is so bizarre. Why is this the only producing lithium mine in all of North America?
And you see all this white shit everywhere, and you see like
you
this
see more
one.
You see more ponds.
Yeah.
Different colors, like different concentrations of brine.
Okay.
It wasn't like piles of salt. It was more concentration of brines. But you kind of see this, and you're like, if this whole electric vehicle, this whole decarbonization is happening, there's got to be something here. And these brine deposits are, they're larger typically regional structures. So it's not like if you have, it's like more like oil and gas. It's not like if you have one section that's hydrocarbon bearing. You kind of look next door. So Clive, in his wisdom, had staked so much of Clayton Valley, and we were able to do a deal. Sorry, I got a little granular there.
I like it.
Able to do a deal. I was able to come back to Frank, and maybe to circle back with Frank. Like, I wanted to build a relationship.
So did you like look him up in the phone book? Were you like, Frank, my name's Brian.
I
like lithium.
I'd looked up to him a lot as a teenager. His nephew went. I mean, we kind of grew up in the same circles.
So you had a way.
Well, actually, what ended up being
60 degrees of separation.
It was one of those.
Kind of angle it in.
Yes.
Yeah. Okay. Good.
But I think for me it was more, Denny, like, and again, this is with hindsight, but I'd looked up to Frank from the diversity in his ventures.
Mm-hmm.
I've enjoyed being involved in a number of different businesses and a number of different industries in my career. And even at that time, not that I had I wasn't in the fortunate position then to be able to do that. No. But I was very curious about different things, and you probably read in my book.
You were thinking bigger. You were thinking about all of these different avenues, these different aspects of business and commerce that interested you.
Yes, and creating value more in general, holistically. You need a starting point.
Yeah.
And Frank was one of those guys, and thankfully we built a great friendship, cool. And that then led into when I came to him with the lithium concept. He's like, "Yeah, I'll back you," and wow. Credit to Frank, like, he backed me, and he was always such a generous partner, and he gave me confidence even at a time where I probably lacked it myself, because I hadn't built a company before. I was a retail broker, doing my best, but then I took Lucas and I,
a retail broker. You were a broker, like a
investment advisor,
investment broker.
Yeah, at a small little firm called Jordan Capital. Prior to that.
Oh, I didn't know that.
Yes.
Okay. Well, I mean, I heard it in the book, but
yes.
Got it.
Yeah, and I think that's where I really cut my teeth with a wonderful man. Maybe where I started this.
You knew this. You knew how the street worked too. You understood this stuff.
Yeah, I think for me, anyone that was in the market from 2009 to 2015. You learned some hard lessons,
sure.
Like that market was a tough market. Yeah. And I share this with people now, like, it's actually a gift to have tough markets. And maybe we don't all realize it, but we create wealth through tough markets.
Yeah. Because
that's where you make the best decisions. And I think that's where people come together and work together. In more buoyant markets, not as much value is created. As tough as bear markets are, that's where value is found and created.
Well, interestingly enough, that's what sandwiched Colin and I together too in our story, with on opposite ends of the continent.
Right.
And it was the bear market, right? Like, I was here in Toronto. I was on the street as well as an analyst with Pine Tree and Sheldon.
Yeah. Your boots on the ground.
And I was a geo in the bush and do my thing. And, and then after Pine Tree's, catastrophic capitulation and demise, I think assets were liquidated and things were, I was on fumes, man.
Yeah.
Like, I didn't have a lot. And everybody was turning their back to mining. It was like all the major shops were cutting out all their analysts.
That's the time to buy.
Well, that was it. That's what Colin said. He's like, Denny, do you know how fortunate we are? Do you know how absolutely fortunate we are? And I went like, oh, how can you fucking say this right now? And he's like, this is the luckiest. Like, I never thought we would ever have an opportunity, like a buying opportunity like this one.
I love it.
And it was just so glass half full. And I went, I'm hitching my wagons to this guy. This is fucking, we're
respect.
Like,
respect to Colin, respect to you for joining that. I agree.
Yeah,
I look at life, I think probably similar to Colin in that way. Like, the greatest drawback any human has is doubt. It's like, get doubt out of your mind. Doubt is not, when has doubt ever served anyone well? Like, if you're trying to build something, don't be reckless. Don't go in with and do your homework and, run a business well and all these things, but don't doubt.
Don't doubt it. Yeah.
Don't doubt. Like, just go for it. Like, treat people well, work your tail off, and usually good things happen, and get doubt out of the mind. Like,
it's hard to do. It's hard to do.
It's easier said than done.
It's easy when you got dough. It's hard to do when you don't, and you're putting it all on the line. You know what that's like. And it's hard to remember that because it's a distant past. It is for me too. And it's like, but you think about that, you think back on that, you go, shit, not everybody's cut for that. And I remember, so interestingly enough, I'm going to jump ahead a little bit because I thought the Frank bit was interesting. I wanted to hear that. I have my own story with, and it's very similar. You put yourself out there, but it's all 6 degrees of separation. And anybody listening who wants to venture off onto their own and take this blueprint, your book is a great one, and add just one little chapter to the beginning of it, which is take that network, figure out who that endorsement person is, and don't be shy. Go in there. They get asked every single day. They say no a lot.
Yeah.
They also say yes sometimes.
Yes.
And when you're there, you're honest.
Yes.
I don't know what it is. They can see it.
Yeah, they can sense it. Like, I think it's a lot of it's genuity. Like,
right.
Come in with a genuine, like, hey, I'm coming in to do my best. I need your help, and be vulnerable in that. Like, hey, I could really use your help here, and I want a shot. But I just want to say to whoever's listening that we were both privileged coming from Canada, coming from large capital markets. If anyone's listening that's not there, maybe that was our privilege in our life, was to be able to have the network.
Sure.
But it doesn't mean it's not possible. Where there is persistence, where there's hard work, you can navigate. Like, just navigate it. Go, don't.
Did you ever hear the story of the guy? There's this guy with the Pepsi Points guy.
Yeah. Yeah.
Right, with the Harrier jet.
Yeah.
Like, and so he's just like in his room for whatever. It's just ridiculous. This guy sees this commercial on TV with the Pepsi Points, and it's like, it says 1 million Pepsi Points, and the Harrier jet comes down, and you can get a Harrier jet for 1 million Pepsi Points. And so he's like, okay, I can do that. Or whatever, 700,000 or whatever, like some ridiculous number of Pepsi Points. And then he goes, well, shit, you can buy Pepsi Points. Like, if you don't have enough Pepsi Points, you can save them up. But if you don't have enough, you can top it up and buy a few. So he finds this guy. Like
yeah.
And it was like a local,
Totally.
He's retiring, fishing, growing tomatoes and weed and whatever the fuck else he was doing up in those mountains. And that guy leaned into him and said, oh yeah, you're right. And he got his lawyers activated, and away you went. And they did it.
They did it.
It's crazy. But
we live in a world that you can, like, what we're so fortunate, I think, today is, like, a product of globalization has been, communication and global markets. And although they're, that tide is changing a bit geopolitically, it doesn't mean that the world isn't such a small place. Yeah. And there's opportunities across the world, especially the natural resource space. And, like, if you're focused on something and you've got a plan, and not that it's going to be perfect. Mine wasn't perfect.
Never is.
Far from it. Yeah, never is.
It's never like how you plan.
Yeah, but go for it. Don't doubt yourself, because your life can pass you by, and you never went for it. Yeah. And if you go into it with a genuine attempt to, create value, to bring good people around, you surround yourself with better people, like, usually the outcome's good. It might take longer, it may, but usually the outcome's good. Good people, find good projects, build good things, get it right on a commodity cycle, and you're fortunate. Some of these things you said, intangibles that are luck, value's created,
That FGC hole 1, if you're listening, luck, baby. We knew like it was a good project, but that was like,
This is newfound.
Yeah, newfound discovery hole.
it's
I mean, come
amazing.
on. But we knew like there was a whole process to that, and this isn't about NFG, and I don't want to turn it into that. But
No, but that is a
like,
remarkable story of success and value creation. It's
like
unbelievable.
we understood the geology. We said, okay, there was a big low grade hole. There was splashes of high grade throughout the project, and like from historic reconnaissance work, trenching, whatever have you. And the basic concept was like, let's just go drill this low grade stuff, like 100+ meters of anomalous gold. We're like, okay, let's just not twin that, but step back 50 meters, drill it again.
Yeah.
And then hopefully we'll knock into a few raisins in the old raisin bread and bump up the average, right? And see if we can get, nudge this thing into godlike. and it was like completely not that. It was like, oh my God, we got down there and we were FaceTiming, and me and Greg, and it was like insane. Box after box after box of like quartz and visible gold. And I'm like, what are those vein angles? And he's like, they're steep. They are steep. I'm like, okay, we're not down the throat of whatever this is. We're getting across it. And it was just unreal, man. What a rush. But it was total luck. I mean, not total luck, but there was a healthy amount of luck.
Yes, there is. In any success story.
Totally.
But you guys were in the right place, right time. You were buying when others were deprived of capital.
Yep.
You'd spent the time working hard. Like, you guys put yourself in a position, and you were brave. You went out and did it. Like, that's maybe the comment around doubt. The other side is be courageous. And you guys were. And unbelievable success story.
So I have an apology.
Oh.
So I want to talk about this bit a bit. So when I'm happy I read the book. And when we had first met, I think we talked on the phone. We were doing that cobalt stuff. We were farting around. We had some stuff. And and we went to Vancouver. We met in Vancouver.
Yeah.
I think Colin and I went down there and we met with you. We didn't have an agenda. We were just meeting.
Yeah.
And then it was just to catch up in town. And then at that time, like, you had just sold, right?
2018.
And I don't know if it was envy on our side, or I don't know if it was Brian riding the waves of like, but you were a big deal, bro.
Yeah.
And he had the big wheel out.
So sorry.
But it's not that at all. This is why it's my apology, is because you asked, I think it was like, I was following up on something and you're like, talk to Lucas. And I was like, talk to Lucas. I want to talk to you. But then after reading the book, I realized who Lucas was to you and how important Lucas was to you and all of that. I'm going, that's actually kind of an honor to be talking to Lucas. And I go, I've had this entire misconception that I was passed off to Lucas.
You definitely weren't.
And it was like, this isn't a pass off. Lucas is like your man. So that's why I called back to Lucas earlier. I was like, oh, that's intro Lucas. Right.
That makes sense.
So
that makes sense.
No,
So
apologies.
No.
It was never a thing. I just kind of parked that in my brain.
Yeah.
But then anyway, this whole book and like this whole kind of admission of like, going to the brink of the party and back and, and all of that stuff and just being like honest, like, holy fuck, man. Like, I was like, yeah, reel it in, big dog. We got to figure it out. Like, happiness is not always the moolah.
No, definitely not.
Right.
Definitely not. I mean, I think striving for financial success is great. We providing is wonderful, and capital gives you an opportunity to enjoy a lot in this world.
Sure.
So, but making it someone's self-worth or someone's ego, and maybe I definitely, I can look back and say probably didn't show up in a humble way, because I was through success sometimes, which I'm sure you've experienced now.
100%.
Yeah.
No. I know exactly.
Yeah. You kind of, it's an interesting experience,
Sure.
and peeling back those societal layers that maybe give you a false sense of confidence or identity yeah, it's a trip. It's a trip.
The Midas touch. We talked about that in Miami.
Right. And I went through that for a bit because it seemed like everything I was doing or I was involved with, it wasn't it was a much broader team.
Yeah.
Whether it
might as well been you though.
No.
No, but I mean, you get that feeling.
You get that feeling.
Yeah, right.
Yeah.
That's the point of this.
Yeah. And it's just not the case. And you know, life has a way of humbling you when you're at, you know, those moments, and it's healthy. It's a healthy dose. And yeah, I think, you know, trying to think, you know, anyone listening, it's for any of us, whether it's success or just society or just life, just like reflecting for me has been a really useful thing for me to do. Just wind down the noise, get off whatever stimulates us, whether it's social media or the markets. I mean, a lot of listeners, you know, the markets, you know, the world's ridden with addiction, and it takes us away from, you know, our core. And I think it's been really worthwhile for me just taking time to just wind down the volume on life and just take some time. And for me, I love being in nature and just go for walks, and like, you know, and COVID was probably good for humanity to just kind of take a step back.
I think so.
And worry about what's important, you know, family, close relationships, you know.
As bad it is to say, in the face of a lot of people who have not had a good time in COVID, there's been a lot of shit.
Yes.
Right? Like, it's been bad for some people. Like, listen,
Definitely.
like if you're listening to this and, you know, not you.
Yes.
Like that, like a really, really, you know, sad. But you're right in terms of the like family unit and all the benefits of it. And I think it has been healthy for the reset of like the family unit, being able to spend time inside and being home, and how many dads were on the road.
Yeah. And
all the time.
You were saying that you have some strong boundaries of like time with your kids.
I do.
Night.
I hit hard boundaries.
I think that's so important.
5 p.m. I plug out.
Yeah.
Sometimes 5:30, but 5.
And you've worked really hard. And for those that have struggled, yes, I'm not, you know, that's a different thing. And that it has been horrible for so many people. But if you have worked really hard and benefited from that success like you have, you draw your boundaries. And that's such an important thing. I respect that.
It's better because for me, like, I plug out, I notice that I'm a better sprinter than I am a marathon runner. And if I'm a marathon, if I claim to, like, first of all, do I look like a marathon runner? And like, you know, like I can sprint to the fridge and back, like, pretty much. But if I do the marathon, I'll just end up walking. Like I'm moving like I'm running, but I'm actually just kind of walking.
Yeah.
And so the reality is, it's kind of like that with work. It's like, if I'm just on it all the time, and I used to be bad, like I was an addict.
Yeah.
Yeah. Like I was like at like 12 a.m., 1 a.m., and I'm firing off emails and
always,
you know,
responding.
Always.
Like,
texting,
can't miss the deal. Can't miss this.
Yeah. Doing this, doing that.
It's not a healthy culture.
It's really not. And you're far more productive if you carve some time out for you, carve some time out for your family, get your fresh legs in the morning, work hard during the day, carve that, like, be disciplined.
Yes.
And like, even I was listening to this thing about like Eminem, you know, Eminem, like the rapper. And I think it was like some other rapper that was like a hot topic, and he was working with Eminem. And I guess Eminem came into the studio at like 9 a.m., plugged in, worked fucking hard, took an hour lunch, came back, finished, punched the clock at 5 o'clock, went home. And this other rapper is like, we're in the middle of this song. Like, just, can we finish? He's like, dude, it'll be here tomorrow. We're going to finish it tomorrow.
It's great.
And he got out, and in the morning, and he said he was there, 9 o'clock sharp, doors open, to work, get it done, boom. And that rapper said, like, I mean, I guess the album, like, the efficiency of the whole thing, it didn't hamper it. You think it's going to hamper it. The world's not going to stop without you working at night. And like, give your time to your family and make you a better person, and a more likable person, which, quite frankly, is kind of important, especially if you're going to be raising money, telling stories. You need to be approachable. You need to be likable. And if you can't like yourself, you can't love yourself, like your book says, you know, if you can't figure out how to do that.
Yeah. And that's kind of like a bit of maybe an overshare, a vulnerable thing, especially for a man to say, but like, I meant that, like, how do I set up a way, how am I going to love anybody else unless I've got a value system, you know, commitments to myself? Like, how am I ever going to treat somebody else the way that they deserve to be treated? And again, some of that is, you know, my own childhood and unpacking that. But, how are you going to share any love? What's the greatest gift in the world? Giving and receiving love.
Totally.
Like, at the end of the day, what do humans want?
Yeah.
Give and receive love. And we find different ways, I think, to, those things manifest themselves in different ways. But at the end of the day, human to human connection, that's what differentiates us. And so.
Yeah, you say that again. I mean, I think it's so important. And if you don't figure out all those goodies upstairs, all those goodies in your inside, and with your relationships and all that fun stuff, then you can never fully fully enjoy anything.
Yeah, and to build healthy organizations, like healthy organizations are so much of the leaders that are there, at least new ones, and like look at the leader of an organization. It can probably tell you a lot about that organization. And some of my time, in this Harvard program I went to that was amazing, like you kind of look around the room and you're like, I get it. I understand how some of these organizations, and again, in the West, the West really prioritizes.
What'd you do, the YPO thing?
It was called the OPM program, the Owner President Management Program.
Okay.
I completed 2 of 3 years. Third year was supposed to be 20. No, it wasn't hard. No, it's during COVID. Oh. No, it's an amazing. I highly recommend it.
Like really fun, yeah.
Super fun. You live on Harvard campus for almost a month. Speakers that came in for us were Larry Culp, the CEO of GE. Everyone from him to Alicia Keys.
Crazy.
And Dirk Nowitzki, and kind of the culture of the Mavericks. Like it was just what it seemed like was kind of like, how do high performing people get within cultures, and how do cultures proliferate value over time? Mm-hmm. And I guess, there's a lot of takeaways from it, but I think back to the point of like maybe being a good man, like so much of success is derived from just that stewardship. Mm. And I saw it real time. Again, our mining industry is so small, and not to disrespect it, but like it is tiny relative to the big world out there.
It's nothing. Yeah.
Yeah, and it should be worth a lot more.
Well, it should be. It should be. That's actually, it's a little sickening, really. I mean,
that's the opportunity.
Well, of course.
I think mining is emerging, and it will through this decarbonization, major trend that we're experiencing. But I think sometimes taking some time out to get these different perspectives, if you have the opportunity to, can be so powerful. Coming back in and looking at things a bit more holistically. So
now you're everything Zen. You did the you did the Harvard, right? Everything Zen. The book's out. So what's next, man? Like, what are we doing?
Just building. Building with guys and gals that are passionate. And
you're not with Frank anymore, really. Like you're still friends, I'm sure, but you're not really. Yeah, you're doing your own thing.
I've been building SAF.
You've always been doing your own thing, really, but
I've been building a platform with a partner, a number of partners called SAF. It's a alternative asset manager in Western Canada, and then
so explain that alternative asset management.
Yeah, so it's a private credit platform.
Okay.
We've lent about $4 billion. Most of that business is run by an incredibly talented partner of mine named Ryan Dunfield, and a great team in Calgary and Vancouver. And that private credit business is essentially lending $20 to $200 million at a time to small, medium-sized businesses that in Canada, in this oligopoly financial system that we live in, there's just a lot of opportunities to lend to businesses that may not fit the mold for the chartered banks.
So how does somebody like that come and see you? How does that process happen if somebody's got this cool, trout farm that they're not, into, but it's like a thing? I don't know. I'm just making maybe unconventional thing.
I think it's become, we're 9 years into the business now. Ryan and another founder started it. Mm-hmm. I got more heavily involved about 5 years ago. So I'd say now we're just working off of word of mouth, but Ryan and his partner, Aaron, they started the business, because they saw an opportunity in the oil and gas space to lend against infrastructure that wasn't getting collateral, recognition from the
What a
charter
hell of a
banks.
timing.
Yeah, and they, yeah,
Yeah, baby.
but you know what? Again, another entrepreneurial story. Like they bet everything on this, and they built an amazing business. I got involved 4 or 5 years ago, and kind of helped it kind of grow from a industry perspective, and then within our broader SAF, what I spend a lot of my time on is more the merchant bank growth side of things. I've got a lot of conviction still around battery metals. It's obviously something I've been close to for the better part of 8 years, but I still think we're early innings I think lithium obviously has had its a remarkable move, but I still think we're early innings on the battery metal side. Anything that's kind of an input for transition. And then, we look at anything. We like backing great people.
So like when you had the big win with Lithium X and like, I mean, that's such a big hurdle to climb and the years you put in and all that, and you get it off and you're done, and you're moving on to the next thing, the next adventure. A lot of your next adventures weren't even mining related, were they?
No.
And so what pulled you back in? The people. They surely can't be the people.
It's a good question. No, I think the people. I think there's a lot of great.
They're great people.
Yeah, they're great.
I'm joking.
And the risk, the risk
I like the
takers.
people.
Yeah. No, I do too. I think.
Is it like a do you know thing? Was it like a shit? I know this space. I know how to make money at this now.
I think what I see now is an opportunity to scale. I think for me, when I was a CEO of essentially a development co, I recognized so many blind spots that I had along the way. And then what the goal has been with SAF is to, build a team that can scale into a cycle and build some hopefully some really big businesses. And I think that was missing. I also think that I had some pieces still missing from my own experience that now I can feel with confidence and conviction we're ready to go. And I think what we didn't have 5-6 years ago was Tesla being essentially a foregone conclusion of success. Like when I started Lithium X, it was still early days.
Right. That's important to remember. Yeah. Right. Like a Tesla at that time was still an experiment. It was some overvalued pre-sale, no one really knew what was going to happen there, if it was going to just not actually take off, or it was going to take off. I mean, in some ways it was made for many people, but in some ways it wasn't. For the market consensus, I think, was still
big time. But now all of a sudden there's a market where outside of just auto manufacturers that essentially, the broader NATO, the broader, have said, hey, we are decarbonizing this planet. And that is the mega metal trend that I think is a generational opportunity. Hopefully I'm not overstating that, but I think it's a generational opportunity to be involved in financing the metals that are required for that transition. Whereas before, lithium was an opportunity because it was a very small market. It's still a small, relatively speaking, small market, but it was like a $2 billion a year market when we started Lithium X. It was $5,000 a ton. It was tiny. That's, I think, just a small proxy to what's going to happen in these other metals. And what's taking time in these other metals is that they're much bigger markets. So it takes time, for demand to kick in and a step change in demand to soak up supply. And then I think all of a sudden you start to get the gaps up and in pricing. And, it's not too dissimilar to what happened in oil in the early 2000s. Oil traded within a range, 80s, 90s, after the Yom Kippur War, traded in the range like $10 to $30, $10 to $40. It had that range. And geopolitically, it would kind of spark up and then kind of come down. Then all of a sudden, China and the broader emerging markets, they came online. And there was this great movement of people to urbanization and a higher quality of life. And what happens? Oil, which was one of the most important inputs to that, but same with met coal, same with iron ore. And you had this 4 or 5 year major push and a new trading range outside of extraordinary events in oil, like going negative. But now all of a sudden, a normal, quote unquote, normal trading range is 80 and it shot to 140. And that's a massive market. That's almost 100 million barrel a day market. That's, nickel and copper. It pales in comparison. But all of a sudden, there was a real new step change in demand. So I think what is going to happen in these bigger base metals, if this transition continues to happen the way that, the global elite say it should happen, in the way that Elon presented the other day at Investor Day of what's required, this kind of $10 trillion number, it's finally this recognition that this wave started with downstream products, i.e. Tesla and EVs. Then it went to battery facilities, gigafactories around the world. And what's missing are these metals. And I think we're going to hit a generational wave. I don't know what's going to start it. I don't know if it's next month. I don't know if it's a year or 3 years, but I think there will be a generational wave.
I'll take that bet. I think you're right, in the sense that, like, I'm not going to fight gravity on lithium and battery metals. There's no way. It's going to be a thing, and it's huge. I mean, when I was in Spain, we have a place in Spain. And
in which area?
In Almeria, which is just up the coast from Malaga. So you go down like Marbella, like a couple hours up.
Yeah.
And so long and short of it is, it used to be bicycles everywhere, and now it's those e-bikes.
Yeah.
And they're sold out, man. Like, they're sold out, and it's a better way to get around. Like, so many people are ripping around on these friggin' e-bikes. It's e-bike city over there.
Yeah.
The ones that look like a moped, but
yeah.
like with battery
But think
powered.
about even like power tools.
100%.
Now,
I have a leaf blower, power tool, like I got like a Milwaukee
and what's in it?
Leaf blower,
lithium-ion battery.
Yeah, it's amazing.
So it's this trend, but it's this transition where back, I think, when I grew up, I remember my mom either having a gas powered one or a plug-in. Like you had to kind of
the plug-in one sucked, and the gas powered one was awesome.
Yeah. But and you've got this transition not just in EVs, you got it in battery storage. So I know that so maybe many of these listeners kind of live through this kind of mining cycles and like we haven't had a real broad-based cycle for probably 20 years, like since 02 to 07 or early 2007. I have a feeling this decade we're gonna hit one, and maybe that's a part of like why coming back. I think some of it was also COVID, like we couldn't move around, but it's also like I think there's an opportunity to build some really great large companies in and around providing these metals that are required for this transition. And I think it's a good use of time. Like, we have a responsibility in this space, I think, to like help this cause. Like, let's go and help finance these projects. Let's go help build good teams. Let's go help build communities around these projects and take a position and with conviction and go for it. And
like, I'm betting on a few. I got a little pocket full of lithium prospects, but I like lithium. I like copper a lot, but everybody seems to like copper. And I'm a gold guy. I still have a soft spot there. I think when I look back on that time, a lot of us, especially in the gold bugs.
Which time?
Early 2000s.
Yeah.
First kind of
Did you live through some of that?
Yeah, absolutely.
Okay.
Yeah.
So I didn't. I missed that.
So the bull run. So like when the bull run really kicked off, and a lot of people think about like it in terms of like post 2008, right? So this is a fallacy, because in reality, it wasn't post 2008. It was actually like 2003 run up to 2008. And well, 2008 was a weird year because then, with the big collapse, everything collapsed, including gold, and like for a short period of time, and then it just vaulted out of that. And but you had a doubling over in the copper price. You had the oil price that you mentioned. That all took off before, and that wasn't on the backs of like a destitute world of financial collapse and fiscal, collapse and debt spiraling out of control and craziness and death and destruction. It was It was actually the opposite. It was about industrialization. People,
Exactly.
bellies were fat. People were doing very well. Economies were strong. U.S. was strong. Canada was strong. China was building like crazy. I mean, like unprecedented uplift of people over the base poverty line. And so I look at, what is going to be the driving force for the next one, and it has to be. So precious metals is interesting because it's not really defined by, supply and demand as much as some of the other things. And whereas like you take copper, it's really a supply
Yes,
demand
utility.
curve, So India anyway, and India is interesting for me because I think India needs a bump, and there's a lot of people there, and I think it needs like that big industrial bump, and so I could see that being a driver. That being said,
Sorry, for precious metals or for
all of it.
Okay,
I think for all of it, especially precious. I mean, we've long known about the prosperity of India being connected to gold, and but I think because of the sheer number of people in India, the people under the poverty limit there, and then possibly that big move, like that's the next biggest population center to China that's due for a little bumpy poo, and if we can get them up, like that's a lot of metal. Right?
It is, but I think part of my perspective and where I'm investing, or where we're investing, the analogy of China and this commodity super cycle 01, 02 to 07, or maybe into 2011, other than the blip in 2008, as you mentioned, it's more this world decarbonization as opposed to a new population base urbanizing.
So this is where we're going to be our point of contention, because I'm scared of the decarbonization narrative.
What scares you?
Holy shit. Okay, you ready? All right.
I'm ready.
So I did a whole lot of research on this because it was like this carbon credit market, the primary, the secondary. And CJ and I started looking into this, and we've been hearing a lot of muttering about deals, got like carbon credit deals, and there's been, that's sort of like the new flavor, right? That's the new weed stock, the crypto stocks, and no discredit to any of that stuff because I know you can make money. But I was like, well, I'll set this one out, I think, on the carbon credit train. We know ESG's been a big thing. And this obviously plays into the narrative. And so anyway, long and short of it, I'll distill it down to this. I think, I looked at global emissions. I looked at all the goodies. And then I was really, really scared about this secondary carbon market in particular because it collapsed Europe once. They leaned into this fiscal solution, which is, essentially to tax people into cleaning up their act, which ultimately just ends up costing people, like the poor people, more money. They just pass those additional taxes down to the consumer. And so looking at the carbon credit market in Canada, one of the really scary things that happened was in the summertime, TD Bank announced that it bought like a couple of big townships. They put a press release out, and they converted a couple of large private townships in Ontario into conservation land. So they got this huge, big, fat tax write-off for that. And then they're launching their tax carbon credit division. And so essentially it works out this way. You're getting about like $12 an acre on carbon credits, something like that, or $18. It depends because the voluntary market's so volatile. It can go from $12 to $40. So this huge depending on how long term the contracts are and et cetera, but that's basically the spread. And so TD had shelled out, and then the federal government in Canada announced in the same release that they were going to convert 30% of all crown land in Canada to similar lands. And so now money grows on trees. Money doesn't fucking grow on trees, right? So you're converting forestry land that belongs to everyone into a carbon credit generating, offset generating resource that's renewable. It just keeps cranking it out every year, and they audit it with a satellite image and say, yep, everything looks copacetic here. And it's literally, this land is quite literally spitting off carbon credits, and that's just, as far as I'm concerned, fake money in many ways, because money should be work, right? There needs to be work underpinning money. And so where does money find its way back down to work? And that's, a concern for me. So anyways, I looked at this a little bit more, and I wanted to look into the private sales in forestry lands in Canada. And I spent about $7,000 doing this, but I did a title search on like every single private land package in Ontario, up in the rural areas, and it's unbelievable. So that's just getting mopped up right now by the Conservatory of Canada, and they're going to get basically sponsored. All that land's going to get sponsored by institutions, and so they're going to be selling these offset credits. And so companies like Shell and the energy companies, are going to have to buy these offset credits to quote unquote clean up their act. It hasn't reduced emissions at all. We haven't seen it reduce emissions at all in Europe either. So this whole narrative of it driving decarbonization or a cleanup of any sort is not happening. And what's happening is the consumer, the small guy, the little guy, pays more. That's it. That cost just gets pushed down. And even more concerning is that it gets exacerbated when you look at the grocery stores and the products on the shelf. We look at inflation and we go, well, our measure of inflation is a basket of products, and there's an index of products, and what are those things? What's happening there? Well, a bag of Lay's potato chips on the shelf in Canada is suddenly $5 a bag, but you think, okay, well, the factory that produces the Lay's potato chip, they have a carbon tax. The trucking company, because transportation is a key target, trucking company that ships the bag of potato chips, they have a carbon tax. And then the grocery store chain that stores and distributes this product, and so now you have a compounding carbon tax that's at every juncture is getting pushed onto that product all the way down to the consumer. And so my concern is that it's a bubble. I mean, we've seen bubbles like this happen, and there's going to be substance that come out of them. .com was a bubble, and there was some great companies and some great things that came out of it. So my concern there is that there's this big bubble that's being fueled, I think in part, by money growing on trees. In many cases, trees that nobody owns, or I don't know. I guess they own. I don't know. It's just weird to me. There's this weird.
There's a lot to unpack there.
Specter. Yeah,
that's a lot to unpack. Well, maybe start at the end. When a government like the United States prints, I think it was 12 trillion, but somewhere between 10 and 15 trillion.
Yeah.
In 2020 to re-stimulate an economy based on nothing.
Mm-hmm.
You usually have mispricing of a number of assets, right? And then we've got
let's put him on. Come on in. Throw the headset on. We're talking carbon taxes.
Hi,
Steve
buddy.
DeJong, everyone. Welcome to the party.
You'll get a
Choke on it.
I just got
Dude, we're deep in carbon taxes, but it's good because we got into this little bit.
No, I think that's a I think there's a lot to unpack there. My
Steve, can you hear okay?
my
Hear yourself?
directional position is more on metals and decarbonization.
Try again.
I think the carbon credit markets are interesting optionality. I don't disagree with some of your points, but the reality is we are in a environment that, whether it's the World Economic Forum or,
Sure.
and not to go down a rabbit hole, but there's a broader
agenda, like a consensus agenda, whatever you want to call
that
it. Sure.
proliferates through and is a function of globalization at the end of a cycle.
Totally.
And so I just think, one, if they're allocating capital, the right and wrong of it, specifically on carbon, I do, from my own position, feel that if the data is true from climate change, then having high emitters offset some of those profits is a reasonable request.
So
If I can just finish my thought.
Sorry.
From a consumer bearing more taxes, I also disagree with you.
Okay.
Unfortunately, I don't think you or I, in the positions that we're in society, can direct that traffic. What one can do, I think, is understanding markets, and this more subset of environmental markets, which carbon is one of them. I think it's going to be a part of our life. and it's more part of a more generational trend. And you talk about kind of gold as something that's in you, and I think it's probably in all of us.
Coming out of Steve's ears.
Yeah, maybe the right time to to pass over to Steve DeYoung. But there are different opportunities for different generations. Okay, and I experienced it in crypto, and I've experienced it, in a few other places. I just think environmental markets going to be part of our life, and to have an outpost to be in and around those markets, I just think is a prudent thing. And I agree. I think it's a very tough market to get into. It's still finding its legs. There's a lot of bad acting. There's lack of regulation.
It's weird. It's thick.
It is, but it's not. Decarbonization seems to be happening. So
don't get me wrong. Decarbonization is happening, and it's going there. I don't think that the specter or the bubble, let's say, of the whole kind of the actual carbon secondary, primary carbon market thing is, I don't think that's going to sink that movement. And I don't think that I think there's definitely money to be made, and it should be invested in. It's a space we're going to have to contend with. I agree with you. As a consumer, even, we can agree there. I think the way I would play it, and I think this is where probably people are aligned, would be the way I would play it would be on the metal side. I would rather play it that way.
You and me both.
I don't want to play the carbon credit.
And to be clear, that's what I was.
Yeah,
that's what I feel the same way.
Right.
I think the carbon credit side is complicated. It's a nascent market. It's got a lack of liquidity. It's got it doesn't have standardization. It doesn't have so many things that markets rely on to be healthy.
Yeah.
Those aren't there yet. It's also the opportunity if someone wants to be brave and go into it. I'm not saying I'm sprinting at it. I think it's interesting to keep an eye on. And I think us as financing, large carbon emitters, it's something to be aware of. Because also if you're producing a bunch of carbon, that may be a liability. And so one just has to be aware. And in many places it is a liability right now. In Europe, it's way ahead of North America. So anyways, I think it's something just to keep an eye on, both from a risk perspective on a producer or an opportunity perspective from a market.
That's it. Thank you very much to Brian. Unfortunately, he had to take off. We ran the conversation a little too long. We were having fun. We were just getting our pants off on the carbon, and Brian, after my truth bomb, had to go and sell all of his voluntary carbon markets. But anyway, we'll have him back. So thank you again, Brian, for doing this. And please stay tuned for Steve DeYoung. I know Steve showed up. He didn't say much there, but we'll be catching up with Steve and having a conversation. And so I hope everybody liked this episode. And it was our first one, so bear with us. In the future, we'll plan a little bit better around this. But again, thanks to Brian, and hopefully we can catch up and pick up where we left off. Thanks.